Right. What's up? Facebook Live, Dave Savage coming live out of Portland, Oregon. I've got Michelle Town and I've got Greg Anderson out of Seattle. Where are you coming live out of, Michelle?
Bonsall, California. And it is a gorgeous sunny day today.
Right on. Yeah, it's a sunny day here in Portland today too.
Yeah.
What about you, Greg? What's it like up
there? It's sunny up here too. I think we're almost out from under Snowmageddon up here.
Yeah, right.
So.
You guys have had quite the snowstorm up there. So anybody who's on Facebook Live right now, let us know what's up. We have officially gone live. This call is being recorded. This is the Mortgage Coach Friday Mastermind. Every Friday, 9 o'clock Pacific. Think of this as a place where the best of the best get better. You know, at Mortgage Coach, we're all about quality, how to deliver the most quality advice to borrowers who want to build wealth with real estate. And to do that in a way to help mortgage professionals have a competitive advantage so that you're not just competing on rates, fees, transaction, like, hey, I can close loans faster than this person. I can get loans closed easier. You know, those are really becoming table stakes. And so it's absolutely essential if you live off of referrals, if you live off of your local market and the relationships that you build in those markets, you need to deliver tangible advice. So on this Friday call, it's very discussion topic driven, and we talking about an array of things. And if anybody's on this call, whether you're in Facebook or you're in Zoom, and you post a question and comments, we will absolutely try to get to it. And most of the time on these Friday calls, we get most of the questions, if not all of the questions answered. On this call today, Michelle Town is a regular leader in the Mortgage Coach Friday call. Michelle, since this is going to be such a producer-based call, if you could just tell everybody a little bit about your mortgage practice, even though most people know it, and the kind of volume you do.
Sure, absolutely. Happy Friday, everybody. I am an originator here. I'm a broker, originator here in San Diego, California, and South Orange County. Primarily where my business is, and we do. I have a team. I have a processing team, and then I have a production team, and we do about 100. And then I have a sales partner as well. And we do last year we did 110 million, 199 units. The year before, 105 million, 205 units. So we do a pretty good book of business, and I would tell you that 30% of my business comes from radio advertising. The remaining part of it comes from past clients and then referral partners. And that would include realtors, CPAs, insurance agents, divorce attorneys, all that fun stuff.
Awesome. Thank you, Michelle. Also, we have Greg Anderson coming to us live out of Seattle. Greg, if you could tell us a little bit about your business model, kind of production you do, and then we're going to get into it here.
Yeah, absolutely. So last year, 2018, we closed 206 units for about 77 million. Per the year prior, we were 224 units for about 80 million. So, you know, right around that 200 to 250 is pretty much where land comes from realtors. You know, some business people, CPA, financial planner, but most of it is realtors, and then also our past clients. We have a really good ratio of returning past clients. So, and I've got, sorry, my team is, I have 2 LP1s, 2 LP2s.
Great. And Greg, your internet is coming in and out. So if there's anything you could do to improve that.
Troubles here.
Yeah, let us know. Hey, Bliss Sawyer, I noticed you joined us as a panelist. Bliss, you are always welcome to be a leader on this call, so you don't need to jump off video. If you could just confirm that you can hear us and say hi, Bliss.
Oh, hello. Sorry, I'm back.
All right. So guys, Bliss is a regular leader in the community, and she was one of the most active, I'd call it founding attendees of this, and then she's been so active and delivered so much value that we bring her in as a leader often. So Bliss, thanks for joining us on the panelists you.
You're welcome.
So, and Bliss, just so you know what we're doing, we're gonna focus on different mortgage strategies to build wealth with real estate. And one of the reasons why I picked this topic, and I'm gonna show my screen real quick, and then Greg, I'm gonna bring you up to bat first. Actually, I thought I was in our Facebook group. I'm not. I want to remind everybody, like if you're new to this call, we've got this awesome Facebook group. It's called Mortgage Coach Productivity Mastermind. As you can see, I'm going to it right now. And there's just been a lot of talk about mortgage strategies. You can watch this call right here. Sean Herrera out of the Bay Area was my most recent mortgage strategy interview. So actually, my most recent was this one, but number 28 was Sean. And this is what really got me thinking down this road, is Sean did a response to Gary Vaynerchuk's rant on how homeownership doesn't make sense anymore. And again, that was just, his opinion. Sean did a really good job of breaking down that argument and saying, you know what, homeownership's never made more sense. But the thing I loved about what Sean did and the way he attacked the message is he's like, you know what? It's all about advice. Let me ask some questions. What are your hopes, your dreams, your goals? And then let's see if homeownership makes sense. And in my interview with him, we did a couple things. We did a rent versus own, which was really powerful. And then Sean also did a really powerful cash versus mortgage. If no one checked this out, super powerful and compelling message. And I know a lot of people watching this, and a lot of people in the market, you compete with cash. And so he just had some great strategies. And then for anyone that pays close attention to our mortgage strategy interviews, one of my personal favorites, and it was a few weeks ago, was Greg Anderson. And Greg did a great job of showcasing a number of strategies. You can listen to it here, where he showed customers. Greg, I'm going to pull up this first one, and I wanted to talk about it, and then I want Michelle to talk about it a little bit. But this is a strategy that you did, and while there is an interview that people can listen to it, if you could, let's talk about this in this call, and then
Sure.
Let's do some training on it, both sales training and some tactical training.
Yeah. So the thing I love about this particular one, Dave, was these clients were, they're just kind of your average, client up here, both work, both make a modest wage, but they have a growing family. They wanted to get themselves into a bigger home, and they were fortunate enough to purchase a home around 2011, which up here in the Seattle market, that was about the low point. So they had built up some nice equity. So they were coming out of, I think their proceeds coming out of the sale of their home was going to be about $85,000. And so we talked about some different strategies on how to use that. And they initially, when they called in, they were very adamant, like, nope, we want to put all of our money towards towards the new home to keep that payment as low as possible. And once I pulled everything and got their application, it was very apparent that they had a lot of debt that they had taken on that they were servicing. It was fine. No late payments or anything like that. It was just they had a ton. All their credit cards were maxed out. They had boat, RV, that kind of stuff. And so really what they didn't realize was it wasn't the house payment that was their issue. It was all this other debt. And so I made them come in and said, okay, this is a huge opportunity for you to really get your monthly budget and your cash flow in the right space. And so sat down. I have in my office here, I've got a big TV on the wall, and so I can plug in my laptop and show people there. And so we went through all these scenarios, and what I showed them, you'll see the first two scenarios is their strategy, which was take that money, put it down towards the mortgage, in one way or another, either all down payment and in scenario one, and scenario two at that time was if they wanted to buy down the rate a little bit. We kind of talked about that. Then I took and said, all right, well, what if we take this option of putting minimal down and taking the rest of those proceeds and paying off all this consumer debt? Okay. What I did was in the other financing box, I put in what their monthly outflow was for other debts. Okay. So you can see that right there where it's highlighted. Okay. That was their monthly outflow for their other debts beyond their house payment. So we paid off everything except for a couple things that didn't make sense to pay off because they were low interest rates and that. And then scenario 3 and 4, basically just the first two scenarios, but instead of putting all that money towards the home, it was paying off debt. So what you can see is it's going to save them about $1,100 to $1,200 a month by going with the strategy of paying off their debt rather than putting that money towards the home. And I think, you know, where that's so impactful is if you are a Mortgage Coach Edge user, you have the ability to show this on a TV screen, on an iPad, share it on a mobile device. You're able to show that analysis and really help people get into a better space. Whereas if these clients are going into their credit union, their bank, an online lender, most of these people are not using a tool like Mortgage Coach Edge, so that they can't do a total cost analysis side by side and show people the benefit. So even if they did take the time to talk about it, which by the way, most of them won't, even if they did take the time to talk about it, they don't have a way of illustrating it to the client. It's hard for just an average person who may or may not be financially savvy to understand that if they can't see it.
No doubt. And you're taking this holistic view of, you know, their goals, their assumptions, and then you're putting it into a picture. You know, just like Dave Ramsey said, the best way to build a relationship is understand a family's goals, hopes, and dreams, and then use a total cost analysis to lay it out. So you did that. So a couple things, guys. So I have Jacob Gibbs, who's the leader of our support organization, you know, drives our product. I mean, Jacob, the best way to describe Jacob is just Mr. Mortgage Coach. So first thing I want to do is I want to see, Jacob, do you have any comments on this in the way that Greg put it together? Any, teachings that you have for folks? And Michelle Town, I want to have you ask any questions you have on what we did here and how you would do something like this. Jacob?
Sure. Hey, everybody. I know it's been a while since I've been on one of these calls, but glad to be here and hoping that I can answer any questions that you have. So in looking over this TCA, I mean, super powerful. Great job, Greg. I love what you've done with how to position the debt payoffs and how to show the monthly cash flow. My only recommendation, and this is kind of borrower specific, is there's also the opportunity to use the reinvestment strategy to show what would happen to the money that they're not putting into the debts, if, you know, in that third and fourth column that you're doing. But again, that's borrower specific. You know, that may be a little too far down the rabbit hole for some people. So keeping it nice and top level with them to just show cash flows and what's happening with their monthly mortgage payment, I think it's a great way in the door. You know, and certainly this also leads into the conversation about, you know, are you partnered with a CPA or financial planner? You know,
right.
And then you don't have to have that conversation. Then it's a joint conversation. So love what you're doing here. I think one tip that I would give for the audience, you may have noticed that he renamed one of the fields to be called Other Debt. If you haven't seen how to do that yet, all you have to do is go into the monthly cost section of any loan product inside Mortgage Coach, and you'll notice that there is a monthly area called Other, and you can actually overwrite it. So you can call it whatever you want. I see people putting in debt payoff like we saw in Greg's presentation. Keep in mind, you can also put negatives in there. So I see people doing like solar efficiency and putting a negative number in there. So it's a very powerful field that you can do for a lot of different types of scenarios where you can offset their mortgage payment in different ways to show different strategies. So great job, Greg. Love it.
Thanks.
Yeah. And I want to make sure everybody caught what Jacob said on the reinvestment. So, Greg was showing some strategies that freed up some cash flow, and he could have put that in as a prepayment, and then it would have not only, shown the cost savings, but it would have really shown like, hey, doing this, prepaying an extra 100, not just taking the cash flow benefit, you could have paid off your house, and a question, and I don't know if you did this, Greg, how old do you want to be when your home's paid off and free and clear? And they would have said, oh, I'm going to be 65, but I want to be 55. He could have put that in, and then he's not only selling a loan, he's selling pay off your house 10 years earlier and save X in interest. And he's really, leading with a much more powerful proposition. Any comments for you, Greg, on that before we bring Michelle in?
Yeah, so I absolutely did that with these people. I do that with probably about 50% of the clients. So just, even the other day I was meeting with a client who, they said their budget was $2,800 and their payment came in at $2,600. And I said, well, good. If you feel like you can, afford $2,800, let's see what that looks like to put an extra couple $100 down. And that made a huge impact. I believe in that case, it took 5 years off their mortgage. And so, we did that with these folks as well. And definitely, I love the reinvestment feature.
Cool. Michelle, any questions you have or any comments you have or anything similar that you're doing?
Well, first of all, I didn't know you could do that on the other debt, so I just wrote that down. And as we talked to Dave today, obviously I don't know enough about Mortgage Coach because Sean Herrera's interview, I said, you can make your screen look different, like my presentation. I didn't know I could do that. I also didn't know the reinvestment strategy. I haven't used it at all, so I need to do a little bit of training. I think I'm going to have to get on with Jacob and do a refresher course because there are a lot of things that I'm missing. So I'm just using it for the basics right now. So.
Got it. So by the way, I do want to transition to this in a minute. So in Sean's interview, you're talking about his rent versus own, right, Michelle? You're talking about particular strategy. So by the way, Jacob, I'm going to share this with you right now. I don't know if you've looked at this or not yet, but I just slacked it to you, brother. And Sean did some really interesting things in this. Although before I formally shift over to this strategy, Greg, is there anything else you want to share about this one? And then also Bliss Sawyer, after Greg talks, if there's anything you want to ask about this. Greg,
I think I'm good. I think I've.
Okay, and Greg, before the call's out, I'm going to pull up the other strategy you did. So
Okay,
don't go away because you had two of them. Bliss, questions or comments on your part?
Yeah, just a quick question. I absolutely love that of being able to put in there that other debt, but I don't know how to do it. So is there a training that shows you kind of went through it real quick and I wasn't 100% paying attention?
So Jacob, before we're done, is there any chance you could share your desktop and show that before the call's out or before you got to jump?
Absolutely. I can show it right now if you'd like.
Yeah, go ahead and take my screen and I want to have a workshop. This is a workshop, guys, to help you better mortgage strategists.
All right. So hopefully my screen should be showing here. Apologies for the multiple tabs. I was not expecting to be on this call today. All right.
I threw it in last minute, guys.
All right. So anytime that you go into a loan product, when you go to the third screen of any product, there is a field right here called Other. And this is the one that you can overwrite. So you can call it debt payment or something like that. And when you do that, this field will actually allow a positive or a negative. So remember, I was mentioning before that you could potentially do like solar efficiency offset or something like that. I do see that a lot lately, especially with the growing solar market in California here. I'm seeing it all the time. But the debt payment one, like Greg was showing, say for instance, you've got $400 in debt. That's just going to be appended to the PITI payment or to the total payment that comes out on the output report. So let me fill this out real quick. All right, let's see how fast I can still do this. I'm not going to use the template, but you guys should be.
Yeah, reminder, anybody who's new to Mortgage Coach and you aren't using templates, you should be. And if you have questions on that, come to our Thursday Mastermind, 9 o'clock. Every Thursday, we're doing Q&A questions. So you should know how to do that. But, this is also evidence of just how quick this can get done. If anybody wants to time Jacob, I guarantee he does it less than 2 minutes. And, my guess is he's on about a 90-second trend here where he's building out a TCA, showing two options and showing the strategy real time. So guys, it's easy. You just need to do it a few times.
Okay, let's see what we got here. All right, so what I've created is just a standard 30 versus a 15. You can see I've got different rates here, different terms. But the important part that we were just looking at is what happens in the monthly level, right? So we've got our payment breakdown here. There's that debt payment field that I created by overwriting the other field. And you can see that I've got this $400 showing in here. Now, if I wanted to show another option, much like Greg did, where we're paying off that debt, I would simply eliminate that from another product. So here, let me go back and create one more product here. And I'll copy that 30.
Guys, notice what he's doing here. He's doing the third product. He pulled a copy from one of the other products. Again, good speed tip.
Okay, and then all I'm going to do is go to the third screen of this product. You might notice me jumping in a little bit different areas than you guys might. If you ever want to get to the end of the last product, always just go to the analysis screen and back up one. That way you don't have to go through 3 screens. All right, so now that I've got that in there, you can see we've now got the 30 fixed with the debt payoff. And if we jump over to the more info section, you can see that one is zeroed out for the debt payment. So my cumulative result here is shown up in the monthly payment difference. Obviously, my 15-year fixed with the shorter term is going to have the highest payment. But with the debt payoff, look at the delta here. I mean, $978 versus the 15. This is still $400 cheaper than the 30-year fixed now because I've eliminated that $400 debt.
Everybody tracking that? Any questions? All right.
Well, looks great.
Thank you, Jacob, and hopefully that was helpful. Bliss, did that help?
Yeah, that's brilliant. Like, I look at that screen every day and I never knew I could change other to something other.
And actually,
Cool.
Dave, before we move on, can I go back to one more thing? One of the items we mentioned was using the reinvestment grid, and I know that there was a couple of questions. All right.
Grab it back. Yeah, you are here to help make our community a mortgage wizard, mortgage strategist.
So this part is really powerful, and there's a lot to it, but you want to pick and choose what you do with it because you can really overkill it if you do too much. And I tend to overkill these, so take what you will from what I say here. And when you go into your adjust reinvestment strategy, there's 3 parts where you can do reinvestments. The top part here is for principal reduction payments. The middle part here is payments back to a current savings account. So if you would actually set up in the affordability section what the money that they have in the savings is right now, it'll subtract the cash to close from that savings and give a new adjusted savings start. And then you could continue adding money to their current savings account. Now, the bottom section here is for a new reinvestment. So this is going to a financial planner or a CPA. You've got a portfolio that's going to get a higher yield rate than their current savings account at 0.01. So something like that, and you'll see this when we get to the Sean Herrera one. He used this very effectively by showing this monthly savings. Actually, he showed the cash that they would have otherwise spent on a down payment going into an investment vehicle on that cash versus mortgage. in our situation here, you can see that if my borrower is able to make the payment for this 15-year fixed at 2666, and they choose one of these other loans, I want to show them what they would do with that money that they would have otherwise spent on this 15-year fixed loan. So I can show them how they can reinvest that money to pay off their loan faster. So you can see I'm saving $978 on this guy. When you put that in there and tab off it, you'll notice that the freedom point changes. So now by simply reinvesting that $978 here, I'm paying this 30-year mortgage off in 11.67 years. Now you can show a number of things. So remember, that's principal reduction. If you don't use principal reduction, you're going to go full term on this. But you could certainly put that money into a new investment vehicle. So I'm working with a CPA that says, you know what, I can get you a 5% rate of return, or a financial planner, actually, not a CPA. And then you're going to take that 978 and put it in that investment vehicle. And this here is at 15 years, how much that asset account will grow to. Now, if you are going to show the investment vehicles down here, make sure to also choose net worth for your long term. Now, total interest in MI is perfectly acceptable.
Wait,
but total
Jacob.
Yes.
Yeah, okay. I wanted to make sure you weren't going to just fly by that. Okay, you're doing it. Keep going.
But when you choose total net worth, it actually, and you'll see this change here, you'll notice that the graphs break up a little bit. That orange part there is the asset you've developed for them. So the green part, that's their equity. But if you want to show them how to reinvest cash assets, you can actually, in the net worth section, show them the disparity here. Their net worth is a combination of their cash assets and their equity. So by doing this reinvestment, we're increasing their net worth pretty substantially.
And folks, this is how you're going to thrive in the future ahead. You know, I talk a lot about WACD, what Amazon can't do. And I think it's really WAZCD, what Amazon and Zillow can't do. And so, you know, as a local referral-based mortgage professional, it's going to be more and more critical that when you're delivering mortgage advice, it's not just, hey, rates and fees, points versus no points, 7-year versus 30-year. It's showing a family how to take their current financial situation and help them optimize how they build wealth with real estate through smarter mortgage decisions. So this is for anybody who's new to mortgage coach, just maybe like, oh my God, you know, I just walked into I barely know how to add and subtract, and now I'm learning calculus. But it's really not that sophisticated once you've done it. So if you're on this call and you're confused, let us know. Comment down below, either on Facebook or in Zoom. We want to know if you need help. And we'll tell you different videos you can watch and different trainings that we have to help you. Also, if you're watching this recording, you know, a couple days later, you're watching this on YouTube, you know, we are dedicated to making you a mortgage wizard. So advice is your competitive differentiator. So if you need help, comment down below and we will help you. Jacob, anything else?
I guess the only other part I would draw your attention to that most people don't even realize is there's a checkbox at the bottom here to pay off the mortgage when your assets are enough to pay off the remaining balance. When you check this box, you'll notice it also adjusts your freedom point. So in this case, what I've done is instead of putting it back into principal reduction, I'm putting it into an asset account so it can grow at 5%, so it can actually get bigger faster. And then once it's enough to pay off the remaining balance of my mortgage, it'll automatically pay it off. And you can see at 15 years, I've still got $42,000 growing in that account because I've already paid off my mortgage. So now I'm free and clear and I've got an asset that's growing. So keep that in mind. Don't have to use it, but it's a great talking point for people. If you're trying to make the decision between should I show them how to reinvest monthly into their mortgage by adding it to principal, or should we talk about an investment account where it could potentially grow a little bit faster, but still have the option to pay off their mortgage when it's time? So there's a couple of options there. And I won't go too far into the details here, but you can also double click on any one of these fields and you can customize the payment schedule. So if you've got somebody that says, I want to reinvest my tax return every year, you can actually set that up.
All right, so questions for the community. Chris or Michelle, do you have any questions? You too, Craig. Michelle, you go first. Any questions?
Yeah, I don't want to go on after him because my little thing's gonna look so minuscule compared to him, but I love it. I'm gonna have to play with it a little bit. I was actually playing with it when I was talking to you, so very cool. Very, 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 very cool.
Okay, well, you're gonna go last, Michelle, and Jacob will be gone because he's got to
Okay,
leave.
perfect. Well, Jacob, can we do this on the live version too? Like if we're doing Edge Live, can we adjust the strategy while we're on the phone with them?
Yes.
You can. Any adjustments you make inside of Mortgage Coach here, as soon as you trigger a right or a left arrow, that's your save button, and that will update the live version of the presentation. Okay. So if they're looking at it live, you can actually do a lot of features without triggering saves, like the highlighting and stuff. But when you want to change figures, it's all going to happen inside the wizard. So these left and right arrows will cause the save to happen, and they will cause your presentation to update right in front of the borrower.
Got it.
All right. Bliss, any questions for Jacob?
No, that's super cool. I use the live version about like 1/10 of that. So I'm excited. I think especially you have your analytical people. What a great way to impress them and kind of give them something deeper than they're going to get anywhere else. So I love it.
Greg, any questions or comments for Jacob on this?
No questions at all. I mean, this is something that I use all the time. So I love it. I agree with you, Dave, is, this is how we're going to differentiate ourselves in the future. And, in this day and age where if you say mortgage, all of a sudden, a Quicken Loans ad pops up on your phone the next time you're on Facebook or whatever. We're always going to be under attack. And so we have to show that we are going above and beyond, and we have a high level than the folks that are working.
Yeah, no doubt. And I'm going to close out with an interview I did yesterday with Jason Nutzman, where he showed and he gave scripting of even if someone's got a higher rate, how to compete and win. So Jacob, with that said, would you mind pulling up the Sean Ferrero example? And Michelle had watched that video, and she was like, hey, there was some stuff in that I didn't even know. So Michelle, first of all, what questions did you have, or what didn't you know how to do about this? And then Jacob, if you could just kind of do your advisor overview of what Sean did here and answer any questions. But Michelle, what questions do you have before Jacob does that?
Well, the first one I figured out, and again, because I was trying to figure out how do I get that total cost and the monthly payment difference all to be on one screen, and I figured if I just shrunk my screen a little bit, it worked. So I was very happy about that. But like that, I don't know how, okay, I didn't know you could switch view like that, see? Thank you, Jacob.
You got it.
That was really cool. I was just shrinking my screen. Now I don't have to shrink my screen to do that. I really like that, but I think what was really for me on this particular program was the reinvestment strategy. I'd have never used it, so I didn't know how to do it. And I didn't know how to show this client this reinvestment strategy to make it effective instead of, sometimes my videos, they're clicked through and they listen to it and then they don't go back to it. So I need to drive my people back to this presentation as I'm talking to them. And that's on me. That's on me as an advisor to get them back to look at it and get them excited about it.
Agreed.
Look at that investment in 15 years. That is like disgusting. $1.9 million if they decide just to put 20% down, or if they put 5% down, they're going to be worth $2.3 million at the end versus nothing by buying with cash. That's wow.
Yeah, and he did a cash versus mortgage analysis, and just does an incredible job of like, why would you pay cash when you could do mortgage? And some of you might be going, I never deal with that. But trust me, if you want to kill it in the future of the market, you need to be able to take on that conversation. And in some markets, it's a big competition. So Jacob, why don't you provide an overview of what we're looking at and any comments you have about what Sean did, and then we'll see what questions come out of it.
Sure. So as you noted, we're looking at cash versus mortgage. And I think one of the key factors to this is with this presentation, you want to do this live with your borrower, or you want to make sure you've got a video on it. And the reason is it's very easy to look at this and look at the negative connotation of a mortgage. Yeah, I'm going to save $3,000 a month by buying cash. I'm going to save $100,000 in interest over 5 years by buying with cash. And the borrower could potentially look at this and go, look, this is going to cost me interest in MI over the long term, or interest in this case. And this looks like a pretty negative report unless you position it correctly. And when I say position it correctly, I'm talking about the power of what that money would otherwise do. You know, it's very important that the borrower knows to go into this reinvestment grid, to check out that equity position and that asset that they're gaining here. And my suggestion for this report would have been to show long-term net worth, just so that really does get drawn out. Because right now, without going into the reinvestment grid, it's really hard to tell that there is an advantage for the mortgages, because, you know, anytime you take out a mortgage, you are paying interest. You know, you are paying a monthly payment that you wouldn't have if you're buying cash. But knowing what that money is doing otherwise is the most powerful part of this thing. So I would actually note this one up. You know, I'd put this one into net worth. I would make sure to highlight one of the columns here to draw attention to it. I would put a video on it, and I would add a payment note actually here to let the borrower know what to look for, just in case this gets passed around to other people in the home buying process. Payment notes are really easy to put in if you don't know how to do this. It's actually just a box on the first screen of the presentation. So when you get to where you're selecting the total cost, you can put in any notes you want here. And they're oftentimes used to disclose things like whether taxes and insurance are concluded, but this is a great place to put additional advice, especially when you've got a report that you know is going to be shared with other people. So I might put a blurb in here that says, check out your long-term net worth when you take out a mortgage. You can see that over 15 years, your asset will grow to almost $2 million in column 3. Something like that really draws their attention to the power of what this presentation is trying to show. Because you guys all know if you're subject to the telephone game, you're going to lose. So you got to make sure that when you send your advice out, your advice follows the presentation.
All right. Any questions from the panel for Jacob on this particular strategy? Bliss, we'll go with you first. Bliss, any questions?
Sorry, I was muted. No, I'm good. This is great information, though. I appreciate it.
Greg, any questions or comments?
Yeah, so this is awesome, by the way. It's something I started doing. I can't remember who I heard it from, but they basically were talking about, somebody in my coaching program was talking about how, you know, housing is one of the few leveraged investments that the average person can get themselves into. So I've started talking to not only people who have cash and could pay cash for the home, but also, you know, first-time buyers, and explaining to them that, you know, if you wanted to go buy $10,000 worth of, you know, Microsoft stock, you would have to pony up $10,000. But if you want to buy a home for, say, $400,000, you could put down, well, technically as little as zero, depending on the loan program, but maybe $12,000, and get into a home that now you're getting into the investment game at a much bigger level. So I love it.
Yeah, and guys, did you hear that? I think this is so important because there are so many people, and I'm doing an interview with Stu Sweet later this afternoon where he met with a family, didn't think they could buy a home, and he's going to be doing a mortgage strategy where they walked out the door saying, oh, I'm going to buy a fourplex and become a real estate investor and build wealth with real estate because of his advice. And if you listen to that Gary Vaynerchuk rant, you know, even Gary V, it was clear that he thinks you need 20% to put a down payment because, you know, he was talking about, oh, I think there's a better use of $100,000 to $200,000. And that's why, you know, Sean did this particular strategy because Gary said, hey, there's a better use to 100 to 200,000. And so Gary's like, hey, or not Sean. Sean's like, hey, if you had and you bought cash, this would be your situation. If you did put 20% down and use that 100 to 200,000, this would be your wealth. But you know what? With a home, you could do it with 5%. And to your point, Greg, you can do it with less than that in some cases. And now look at the wealth that you can accumulate. So I just think, you know, I love, like in Greg's market, he's in Seattle, so he used the Microsoft story. You know, in different markets that you're in, you're going to have different buyers that have different perspectives. And when you can start talking to them about leverage about wealth, now you're not the rate quoter. Now you're not just a loan officer who has to compete on the lowest rate, lowest cost, and I can close your loan in 7 days. You can be, I'm a mortgage advisor. I'm a mortgage coach. I'm showing you how to build wealth with real estate. So I just want to make sure everybody picked up on that. Michelle, anything to add or any questions for anybody on the panel?
No, it was amazing.
Okay, Jacob, anything else you want to show? I know you've got to jump, and I threw Jacob, quite the hot potato, asking him to jump on today's call. You killed it, buddy. But anything else you want to show the community while we're on these topics?
There is one more thing, actually, Dave. You made mention of doing multiple investments. You want to become a land baron. You're gonna use one house to support another. Don't forget about this other field. This one could also be rental income offset. And that could be rental income from a second property that they're buying. So as part of your strategy, you could put something like negative 1,000 here, and this will offset your principal and interest payment here. I mean, look at this. It now jumps down to 688. So pretty powerful thing that you can use on either side of the equation, whether it's positive or negative, to show different types of scenarios to your borrower. So keep that in mind.
Wait, time out. I want to riff here real quick, because that was the other thing. When I was watching Gary Vee and that whole point, I think he was missing the point. Like, we live in the world, the Airbnb world. So think about this. First-time home buyers could buy a home, and maybe it's not a duplex, but they're buying a 3-bedroom home, and they could Airbnb a room or two. So that's a strategy that, I think mortgage professionals need to think about, and how much do you think you could Airbnb a room for, or 2 of these rooms, and generate income, or duplexes? And then I open it up. We've got 3 really smart mortgage professionals on the call. What are some other ideas that could be in this offset to help a first-time home buyer that can barely buy get into a home with an offset? Michelle, I saw your hand go up.
Oh, yeah. I always think, how, and I try to discourage people from buying a place, a first-time home buyer buying a place that they're going to depend on their roommate. But this would be a great way to show, instead of that, oh my gosh, I'm paying $1,800 a month rent and my mortgage is about to jump to $3,000. They bought a 2-bedroom, master suite condo, and they're going to rent out the condo, their master suite at $1,200 a month. You could show that in there to show them what their net effective payment is going to be. That would be great.
Love that. Greg, any ideas on your side or anything that you do? Other ways?
No, I love this. I have not used that, but it comes up a lot, especially with the millennials. They're cool with, having a buddy or a coworker live with them. And so to be able to put that negative amount in there and show them that, if they had a roommate, that's great. Love it. Thanks for sharing.
Yeah, no, Bliss, what about you? Anything come to mind that would be a creative idea in how to use this feature of Mortgage Coach?
No, I love that rental income offset, because people have that all the time, whether they're buying it as a rental property or, like you said, they might want to have some rental income from it. It's kind of brilliant. So
okay, guys.
Ideas.
So now it's time to open this to the bigger Mortgage Coach community, whether you're on this live or whether you're recording. I want to know all the different things that you could put in this field to help a family make a clear decision, a better decision on how to build wealth with real estate using Mortgage Coach. So down below in comments, if you're watching this and you have used this particular field, what are some other strategies and ideas? And if there's a total cost analysis that you used, put a link down below. I'm always looking for great interviews. I came across this one with Stu Sweet that I'm going to do later this afternoon. So if you've got an idea or a strategy, let me know. Jacob, I know you got to go for sure in 5 minutes, but I'm going to let you go early unless you have another question or comment right now.
I guess the only comment I have is one of the other items I see getting put in this field quite often is the MCC credit offset. So if you're able to offer the MCC credit, you can actually qualify your borrower on that lesser PITI payment with the MCC offset. So if you're familiar with what that is, you already know what that means. If you're not, you probably can't offer that. So just keep it in mind.
All right, guys. So I am sharing my screen again. Jacob, feel free to jump off anytime you got to go. Thank you so much coming in and bringing extra value to today's call. I am right now on my screen, I am showing you guys this mortgage strategy playlist. So I want to make sure you guys are all aware of it. I'm on number 29. And so if you want to be the ultimate mortgage strategist, I just urge you to put this on your playlist, you know, and think about like, hey, am I going to watch Netflix today, or am I going to watch a mortgage coach, mortgage strategy interview? You know, the only difference between us and Breaking Bad is you're going to make more money if you watch these videos. So put this on your playlist and check it out. I do want to shine a light on this particular strategy right now. Jason Nutzman is a regional leader in the, he's in your area, Greg. He's awesome. You know, he's the head of production now for the Absolute Group up there, which is part of Finance of America.
Uh-huh.
And in this particular interview, he did two things. One, he had done a study for the past 2 years looking at loan officers that use Mortgage Coach versus loan officers that don't. And 2 straight years, the loan officers that use Mortgage Coach regularly are more profitable. And he actually, in this interview, he does a little bit of a case study, and I don't know if you can see it on my screen, but this year, the loan officers that use Mortgage Coach were 8.23 basis points more profitable because they had less price exceptions. And last year when he did this study, they were 9 basis points more profitable. So one takeaway for everybody is that using a total cost analysis at the point of sale is going to reduce rate shopping. And then, you know, what he did in this made it, I thought super cool. I mean, the case study was awesome, but then he did a Mortgage Coach total cost analysis where he was competing with an online lender. And, you know, I want everybody to think about this, whether it was an online lender or it was just a lender that's got an 1/8 or 1/4 bank. We all have that happen. And he had a whole script around, don't be afraid of that. Put it into the total cost analysis. Put your competitive quote in the TCA, and you'll notice that they had a 3/8 better rate. So he's like, I'm not afraid of that. They got 3/8 better rate. Let's look at what that difference is monthly, and then let's look at that difference over 60 months. And basically the difference over 60 months, which was the time that the family likely was going to have the home, was $1,800. And so he's like, think of the value that I've delivered. Think of the advice that I'm going to bring you. Is it worth $1,800? It was. So great strategy, great script that even if you don't have the best rate, don't compete on rate. Don't compete on monthly payment. Look at that cost over 5 years and then talk to them. Am I worth $3,000? Am I worth an extra $5,000? And what you'll find, he says, is that first of all, we win most of the time. And then maybe we need to make an exception, but we're making less of an exception than we would have if it was purely based off of rate. Instead of like, okay, they're 3/8, I'll adjust it an 8. You're competing on total cost over 5 years. So I think this is an important interview. I think it's an important strategy because price compression is not going away. And competing on price is not the best way to serve a family. Compete on value. Compete on, these are your goals. I'm a strategist. I'm an advisor. I'm going to do an annual review. And you have to be willing to actually, I'm going to do that annual review. It can't be like, I'm going to do it and I never do it. But I'm going to help you manage your mortgage over time. So check out this interview, gang, if you're watching it. Guys, any questions on this particular strategy or any thoughts before we bring in Michelle? Wow, mic drop.
Is a good one, Dave, for sure.
You like
and
that?
It's something. Here's what I'll tell, and I tell other loan officers with my company when they're asking me about, the benefits of using Mortgage Coach Edge is, it might not be that you're completely able to avoid a PE, but maybe that PE is a quarter instead of a half, or maybe that PE is a half instead of a full point, right? And that's really where I use it, is exactly how Jason did here, is to break it down and show people like, look, it's not that much different. So I do the same thing where I'll take a quote they got from their credit union or their bank or an online lender, and I'll put it right side by side and show them the difference. And in some cases, I've been able to show, like, let's say, hey, we're gonna finance a single premium mortgage insurance in here. So actually, your payment's going to be less than the option that the online lender gave you.
Love that. Michelle Town, any questions or comments before we throw you to the wolves here?
No, I think it's incredible, and it's one of the things where if they're not your client and you're going to lose them because they're looking at that interest rate, he just showed you that what that interest rate actually meant. I don't get in arguments with people, but the majority thing I said, I'm going to give you the interest rate you want, but let's talk about what that means, and so I can get them off of it, because when you actually look at it dollar for cents, it's not that much. Now, if you have somebody who doesn't think your worth is worth $1,800 over 15 years, broken up, maybe that's not your client.
Well, but not only that, maybe you aren't delivering enough value at the point of sale. Maybe the service experience that you deliver isn't worth $2,000. And then I think you need to go back, listen to my interviews with Michelle, listen to my interviews with Josh Metal, because if you want to be a referral-based local professional and deliver a Nordstrom's quality product, and you're not going to be the low-cost leader, it has to be real. Like, there has to be real value in that experience, the speed in which you respond, the quality of the service. Are you delivering a fee worksheet? Are you delivering a total cost analysis? Are you really delivering advice that matters? Not all advice matters. So I think, don't just go, oh, it's not my client. Go, oh, maybe I didn't deliver a tangible level of advice that is really worthy of $2,000 over 5 years. And I think that's what everybody needs to ask themselves nowadays. Again, if you want to thrive as a local referral-based lender, if you want to go to work for an online lender, you want to be a member of a team, not a leader of a team, then, keep quoting price, not advice. Bliss, any questions or comments?
Nope, I'm just listening and absorbing everybody's stuff.
All right, cool. So Michelle Town, I know you got a strategy to share. We only have 8 minutes, but let's get into it real quick. What do you got? And what are you doing?
Okay, let me
share your screen. I'll tell you when I can see it.
Okay, I'm going to share. Hold on. Share. I'm going to actually move it over so I'm just not staring. Hold on. Okay, hold on. Share.
And while she's sharing that, if you're watching this recording, I am looking for more great strategies to share. Share a total cost analysis below. I mean, this is a mortgage strategy interview. We're looking for more great success stories. We're also looking to answer any questions you have around this. So I hope that this is one of the most liked, like you watch this and you go, I like it. And then 2, it's got the most comments of any interview I've done in a long time. Put those comments below, questions and ideas. We can see it in the show.
You can see it? Okay. So this particular one was, I had a buyer that had no down payment. I mean, 3.5%, that was it. She had $20,000. And the agent and I were going back up, let's increase the purchase price by $10,000, have the seller pay the closing costs, or could she take a loan or a gift from somebody else, which she was looking for. So the first one I put in was my favorite, which was increase the purchase price by $10,000, and her cash to close is $20,000 still. That's what she had to put down. That's our 3.5%. So then I put it versus the 575 where she wanted to be at the interest rate, and told her this is what you're going to need to come in with. So you need to go find $10,000 somewhere. And then I put on the third option, I put if they wanted me to pay the lender credit, because that's what she said, well, can't you pay my closing costs? I said, I'd love to pay your closing costs, but let me show you why that wouldn't work. So really the 2 options between the 585 versus the 575 lender credit, it was a difference of $213 a month. And she was like, oh my gosh, you mean, I said, your payment's going to go up $213 because my interest rate is higher because I have to give you $10,000. So she really liked this. It helped the realtor understand it too. We actually all got on a live presentation on this. to kind of show her what was important for her. And then this particular client, she didn't understand the tax benefits either. So when I do these presentations, I always highlight these two screens, which is, and for her, she's going to have a tax benefit because she's purchasing in the right price zone. So I said, think about it this way. Every time you make a $4,000 mortgage payment, $751 is going to a tax benefit and $827 is going towards your principal. So, and that's how we come up with your net effective payment. It's still a little bit higher than what you would pay in rent, but then I have her scroll down, take a look at in 10 years, because she plans to be out of here in 10 years, look at how much you would have paid in rent and look at how much you've gained in just equity on, forecasted equity and pay down on your FHA. And it was kind of the deal sealer for her, because she, nobody thinks about $23.75 a month in rent until you put it in even 40 months. Look at 40 months. I said, you realize in 40 months you would pay $96,000 in rent. And when you put it to people in a, I don't try to do it over 30 years, although it's pretty scary when you look at 30 years. If you put it in look at what's going to happen in less than 4 years, how much money you've spent, $100,000. If I can show you a way to make that work now, would it be worth a conversation?
Love it. So pure value, guys. I open it to the panel. Greg, any questions or comments?
I think it's great. I mean, that's absolutely when you start showing them what they're paying in rent, even over a 3-year period like that, is so impactful, right? And the other thing I would add to that is, if you can, I made a little flyer that I give out to realtors to help first-time buyers. Is I show them, that kind of what you were talking about, where a lot of people think you have to have 20% down. So I showed them a 3% down now versus if it took you 3 years to save 20% down, what does that look like, right? The home appreciation, the change in rates, all that.
Boom. Love that. So I love this call. That's another thing I would love to know. On Fridays, it's freestyle, it's mastermind. And I think it's more and more important to be this mortgage strategist, this mortgage wizard, this mortgage coach. If you want me to do more calls like this on Friday, where I bring Greg's and other master strategists together and we talk about strategies, let me know in comments down below. Like, yeah, Dave, I want more calls like this. If you have questions about specific strategies, let me know down below if you want us to do more tactical stuff like this. I want to remind everybody on today's call that about the mortgage strategy playlist. Also, I want to shine a light on our website. Our team recently created a page called Mortgage Coach Strategies. And each one of these strategies is where we're picking what we think are some of the best strategies, and we're labeling them. And then if you click on any one of these strategies, you will get both the interview. So you'll get to hear the interview with the loan officer talking about strategy and scripting. And we got an internet issue. Anyways, you'll hear the strategy, and you'll get the actual TCA, links to the total cost analysis. So I just want to make sure you guys are aware of these resources. We're dedicated to helping you guys kill it in the, call it the new market. Also, before we wrap up today's call, I want to make sure everybody noticed that our marketing team put together a playlist from Scriptpalooza. So in case you did not notice, every single one of the scripts from Scriptpalooza has been edited and put in our YouTube channel. So if you don't want to watch 2-hour Scriptpalooza, you just want to watch a specific person's, you can look at that. I'm looking forward to seeing which of these gets the most views and which one was your favorite, but recognize that that's there. And then also want to remind you, we put together the Scriptpalooza playbook. So that was where our marketing team took, the takeaways, the scripts, the email examples, and they put together a PDF. You can get that from our Facebook group. And so there's a playbook that's been released. There's a playlist that's been released. And just know we're dedicated to your success. So in the last minute, remember, if you have questions, I hope this is one of the most commented on videos in months. Ask the questions, share the strategies down below. And now, Bliss, any questions or comments before we wrap up today's call? Or just last thoughts?
I'm good. I think it's great.
Greg, any last words of wisdom for the mortgage coach community before we wrap it up?
Yeah, the one thing I would say is this is not this total cost analysis is not going to win you every single deal. So don't get wrapped up if you lose a deal and say, "Oh, I'm not going to use this tool anymore because it didn't win me that one deal." It will win you more than if you don't use it. That's my 2 cents.
Love that. Michelle, any last words of wisdom from you before we wrap up today's call?
No, I think it's a great call. I think I like being able to see what we can do with Mortgage Coach. I really liked being able to learn a few things today. Thank you.
All right, guys, have an awesome weekend. If you got value, give us a like, share this with your mortgage friends. Have a great weekend, everybody. This call is
Thanks,
a wrap.
guys.
Take care. Thank you, Greg, for jumping on last minute, buddy.
Thanks, Dave. Appreciate it, man.
Come anytime.
Thanks, guys.